Good morning and welcome to the Killik & Co Market Update. It's been a relatively quiet week for reporting and economic data as we draw towards the end of the second quarter. UK and US markets have posted positive returns over the quarter, whereas some European markets have fared less well, with the French and German markets posting losses. The aircraft manufacturer Airbus revised its forecasts earlier in the week. The company reduced its full-year guidance as it faces higher costs in its space division. It is now expecting to deliver a slightly lower number of commercial aircraft this year, reducing the number of expected deliveries from 800 to 770. This has been partly caused by supply chain issues. Despite the modest cut, Airbus have successfully ramped up deliveries following the air travel disruptions during the pandemic. We believe the issues are short-term in nature, and Airbus are well positioned to continue benefiting from strong demand growth in the future. The company is working to improve supply chain efficiency without compromising in safety and quality, issues which have severely impacted the main competitor Boeing. As the second quarter closes, a number of US companies will start reporting in the coming weeks. Analysts are forecasting strong momentum in corporate profits, with expectations that earnings will increase by around 9% for the second quarter, which would represent the strongest growth in over 2 years. FedEx reported upbeat results earlier in the week. The company is one of the largest courier companies in the world and is viewed as a bellwether for economic conditions. The better-than-expected profits were well received by investors after the company previously reported challenging conditions last year, prompting the management team to implement cost-cutting initiatives with a commitment to reduce costs by $4 billion by the end of 2025. The company also reported a stronger forward outlook, with the consumer demand picture expected to improve over the course of the year. First quarter US GDP numbers were revised up modestly to 1.4% yesterday. The US economy has outperformed its peers over the past couple of years, as you can see in this chart. A major influence has been the unprecedented amounts of government stimulus. Around 70% of economic activity is derived from private consumption activity in the world's largest economy. This was sustained through the pandemic by 3 rounds of government checks sent directly to consumers. And since then, the Biden administration has injected trillions of dollars into the economy through several rounds of major legislation. US government spending has been running at an annual level around $2 trillion higher than its pre-pandemic norm. Many economists believe that this has been the decisive factor in the outperformance of the US economy relative to peers. The performance of the US economy has been well received by investors. However, the stimulus packages have concerned economists, as they've been financed in large part by additional borrowing, as the government is effectively spending more than it collects in tax revenues. The budget deficit is forecast to continue increasing at a time when the cost of interest payments on the ballooning debt are at the highest proportion of GDP since the Second World War. The US government spends more money servicing its debt than it does in its military, which has the highest defense budget in the world by some measure. The nation has not balanced its budget since the Clinton administration over 20 years ago, and the deficit is expected to widen to around 7% of GDP this year. The first US presidential debate took place last night, and both Biden and Trump were asked how they tackle their national debt, given that borrowing reached new highs under both presidencies. Sovereign debts could well become a more prominent concern for investors in the coming years. Moving to the earnings calendar, it's a quiet week ahead, with Sainsbury's reporting next Tuesday and the oil major Shell reporting next Friday. That's all from us this week. If you have any questions or comments on today's update, please do get in touch with us by emailing info@killik.com. Have a great weekend and we'll see you soon.